Hello and welcome to the Talk Diaries with me, Tanya Beckett, and I'm very pleased to say that I'm joined this time by the Economist Vicky Pryce. We want to talk about the UK budget, but I'm going to introduce her first of all. She is former joint head of the UK Government Economic Service, chief economic advisor at the Centre for Economics and Business Research, and a professor at King's College. So I'm very grateful for your time, Vicky. Thank you very much for joining me in this pre-budget chat. Now, I think it's really important to talk about the UK budget and to listen to talk about the UK budget for people, lots of people all around the world, because it teaches us a lot, I think, about economics generally, that any chancellor, any finance minister, the sorts of things they have to consider. Now, before we went into record, I was suggesting to you that chancellors before 2010 and the financial crisis around that time, it was 2007 really, wasn't it? And then before the Ukraine war, had a better, and COVID had a better time of it because they had solid growth, about 2.5%, and solid inflation. You told me that you think that's not the case. So why is the Chancellor not in a particularly difficult position? Or maybe you think she is, it's just it's never been easy.
Well, no, she is in a difficult position, but what I meant is that it hasn't been plain sailing all along. And you did yourself mention the financial crisis. And during that time, of course, Gordon Brown had become Prime Minister. And a lot of blame was put on him for some of the issues to do with the financial crisis and whether, he was aware of what was going on when he was Chancellor. But we have had periods before. Of course, we've had the sort of sterling crisis, if you like, going to the IMF, 30 years earlier. But we also had the issues of boom and bust. We've had the barber boom, inflation going up, so all sorts of issues to do with chancellors perhaps not quite understanding what the underlying situation was with the economy and perhaps encouraging too much growth or too much money supply increase. And do remember that we've also, as a result of that, had a period when money supply was looked at very, very carefully. In fact, when I first started working for a bank in the city, there were constraints on how much we could increase M1, M2, M3, which was basically monetary measures, money supply. So whether it was non-interest bearing bank deposits and so on, we had to all go into the Bank of England and told off by Charles Goodhart, who of course then invented the Goodhart Law. Maybe he didn't invent it, but he said it, and it's become his law, which is trying to control one thing, and then suddenly you find that something else sort of goes out of control. So it does happen. It has happened. It has not been easy. And when you thought it was easy and you were going around doing things like trying to obscure the fact that you were needing to borrow quite a bit to, let's say, fix or build new hospitals, and you got into, as Gordon Brown did, the private finance initiative, you found you had huge costs coming to you afterwards simply because you tried to plug a hole in the short term. So it hasn't been easy continuously. Yes, there are extra problems now that we can discuss if you want.
I like to think that economic advisors are more plugged in and more influential these days, but I could be wrong. But let's go through. So the budget is on Wednesday, the 26th of November. Now, what is a budget? A budget is when the Chancellor, in this case, presents really to the nation the state of the UK finances, and also talks about measures, taxes, for example, or spending cuts that are going to try to move the country forward, or plug a gap, as we might argue in this particular case. So what is she going to say in terms of this? Just go through some of the challenges I think she's facing. She's got inflation, which is proving sticky or difficult, right? So that means that interest rates will be higher than she would wish them to be. And that means that we are paying more for our government debt than we would wish. That's the first one. And the second one is that the growth rate is low. So that means you can't assume that taxes are going to start booming, income tax and so on, and corporation tax. And I suppose the third one is the welfare bill, which is a demographic and structural problem, isn't it? Would you argue with those three?
No, I wouldn't at all. But of course, there is a further constraint, which is that we borrowed an awful lot after the financial crisis, a lot of quantitative easing, by which we mean the Bank of England helped the government borrow quite cheaply by intervening in the market, buying bonds in the secondary market, keeping interest rates low, all that sort of stuff, which allowed this huge expansion in debt. And we're now very close to 100% debt to GDP ratio, something we hadn't seen since the Second World War, really. So, and that is one of the constraints that Rachel Reeves is dealing with, because she has promised not only to get growth back, and you mentioned that already, and as part of the sort of manifesto and after, but also to reduce the debt to GDP ratio by the end of the Parliament. There is a 5-year rolling target that is being set. Now, that debt to GDP ratio remains very high because we need, just as you rightly say, to carry on borrowing, partly because of the welfare bill, partly because we need to pay the interest on that huge debt, which of course increased further during COVID. And that is a constraint that she has to deal with. And if you start your government period, or period in government, as the Labour Party has done, by saying we're not actually going to raise the main taxes on people, such as income tax, national insurance contributions, and VAT, value-added tax, then you've got a real problem, because you're backed into a corner and you've got very limited choices. And that's what is going on right now in terms of worrying about what the budget contents might be.
Okay, let's start off with, if we can, the budget is about 1.3 trillion, is it? Something, it's around there, isn't it?
Well, if you mean
Yeah,
how much
is
you are
spent.
collecting every
How
year,
much we
and
spend.
yes, we spend a
Yeah,
little bit more than that, because we collect around that, and we spend about whatever it is, 200 billion more, or have done. And the idea is to reduce
right.
that
So we're
as much
spending
as
more than we're
possible.
collecting on an
That
ongoing
is
basis.
that has been the issue for the last few years, most definitely, and COVID, of course, has exaggerated it.
Yeah. Okay, so what are we spending that money on? Because I suppose it's tempting to go for the areas that we're spending a lot of money on, is it? So welfare and social spending and so on. That's a big chunk of it, isn't it?
Welfare, but also the National Health Service. And I think it is worth now thinking about this. Of course, there's defense, but it isn't actually, for the moment, requiring an awful lot. So we're trying to raise it from about 2% of GDP to 3.5% of GDP. Let's see if that actually happens. But otherwise, it's social spending, which is absolutely essential: social care, health, education. Of course, to a considerably less extent, the police and the criminal justice system. So all these areas, of course, need attention. And there is also a fair amount that is spent, of course, on infrastructure. But we also, of course, need to bear in mind that a lot of that spending is on people. We employ an awful lot of people in the public sector, something like over 5 million people. The civil service is, of course, considerably smaller than that. But if you just think of all the workers who keep all these things going, and then, of course, we keep loads of private businesses going, because the government spends a lot on contractors and private sector suppliers, consultants, all that. And even if you think about defense, a lot of it goes to the private sector. So actually, government spending is a very important part of what goes on in the economy, because it employs lots of people. It spends a lot of money for the private sector to produce various things that are needed. Huge amount of procurement going on. A lot goes, of course, also to universities, education system, as I mentioned already, but also higher education. All good things for the economy. So we are really a mixed economy, frankly. And a lot of companies depend on what the public sector does. In addition, the public sector regulates loads and loads of what goes on in the economy. So if you just look at the private firms in the FTSE 100, I'd say the vast majority come under some sort of government control. I mentioned defense already. They procure and do things for the defense sector. But also, if you look at the pharmaceutical sector, where again, a lot of money is being spent purchasing their products, the prices are controlled by the government to a very considerable extent, what they can sell to the NHS. If you look at supermarkets, they're controlled in terms of competition regulation. Banks, very strictly controlled, or supposedly, although those regulations are being relaxed.
So all of these provide jobs and also help regulate us so that we are ordered. So it naturally goes back to thinking, okay, this welfare bill, or to some extent the NHS bill. That's why people look at that, I suppose, and they say, well, it's very difficult with the NHS because we have an aging population, more people need care, and with welfare, it seemed to go through a very sudden rise post-COVID. So that's what they've been trying to tackle, but not with success on the subject of welfare. Now, welfare is what percentage of the I need to look up my figures here, but it's a large percentage, isn't it, of the budget?
Absolutely, and the reason why everyone is worried about is that just disability and sickness benefits could be rising by the end of this parliament to about 100 billion, if not more, a year, if you look at the whole package together. And that's a real concern, because we've seen those, that type of spending go up very, very significantly post-COVID. Many more people are sick. Inactivity rate hasn't really changed hugely. It's about sort of 21% or thereabouts of the potential sort of labour force. But what you do find is that there is a serious issue with people who, within that inactivity number, are actually on the types of benefits which are now escalating very, very significantly in terms of size. And it's one of the things that people are worried about. A lot of emphasis is now in the media being put on pensioners and the pensions bill and the triple lock. Yes, the triple lock cost. In other words, if you have to increase, for the moment at any rate, although it was stopped for a year during the COVID crisis, or just after the COVID crisis, by the previous government, because it would have been far too expensive to raise pensions by earnings. So it's other earnings, CPI, in other words, inflation, or 2.5%, whichever is the highest, you get that one. It seems. So at that time, earnings were sort of zooming ahead because we had very high inflation, and they were zooming up higher than inflation by a considerable amount. So that was stopped for a year, and it was just moved to be only inflation. But what is being looked at now is whether this triple lock is unaffordable. But if you look at within this big welfare spending that is going on, the pensions one is actually the most stable, strangely. So that's not really where the emphasis needs to be. The emphasis needs to be on sickness and disability, and that is the one that's worrying everyone. That is increasing. It's been doubling in the last
and
year.
this is worth pointing out. Yeah, and it's worth pointing out at this point that whatever decision you make is not purely an economic one. There's also a political element, that even though something may be a large percentage of the budget, there may be a lot of political opposition to reducing it, or something may be a small part of the budget, and yet the political impetus is very great. And we'll come to that when we come to the raising tax issue. But it's important to say that politics plays into all of this, doesn't it?
Well, that's why they haven't actually been able to reduce the welfare bill significantly at all. When they tried, this Labour government, they had to abandon it more or less. And there's now a review going on by Stephen Timms, who is looking at the PIP payments, which are the sort of personal sort of incapacity payments, which were the focus of the attention before, to try and reduce those because they were increasing so significantly. And actually there may be some reform, but I think it's been promised that they're not going to reduce the overall amount. That's not what they're looking to do, or even eliminating those types of payments. So I'm not quite sure what that review is going to do, but perhaps helping more people get back into work. That makes huge amount of sense. But quite a lot of people who get those payments are at work anyway. So it's a very, very confusing picture. So if you just add to everything else you said before, the fact that politically a number of these things are so difficult for the Labour Party right now to do, is there is a whole faction within the Labour Party now which has been quite actively objecting to some of the policies that Rachel Reeves has been putting forward, and others in the cabinet, and therefore making it very difficult for various things to be passed in Parliament. So that is one of the worries that they're going to have looking ahead, and that's why everyone is now focusing on some simple ways in which you can just raise tax without messing about, since the spending cannot be done. The cutting of spending cannot be done easily. Is there any other way in which we can bridge the gap? We spoke about spending and collecting revenues earlier. Bridge that gap through a different route, such as possibly raising income tax, which of course would be against the manifesto
let's come to
promise.
that now. Yeah.
So
let's come now to raising money.
Yes.
As you said, so we've been through spending it. And we know that we don't raise quite as much as we spend, but we can talk about that gap in a second and what that means, because it's expensive, right, to pay for money at the moment. And this is another major issue and why Rachel Reeves wants to start balancing the budget. Let's come to spending. Raising tax. When it comes to raising taxes and raising money for the government, income tax plays a huge role, doesn't it? Which is why it's doubly attractive, I suppose, for the government to try to get as many people out working as possible.
Well, yes. I mean, income tax raises over 300 billion a year. But then there are two others. National insurance contributions now raises about 170 billion. Well, it's been going up and down a little bit because, of course, remember Jeremy Hunt cut the rate of national insurance contributions from 12% to 8%. So in two goes, in January 24 and then again in April 24, leaving actually that 20 billion gap straight away, since it was 10 billion each time, for Rachel Reeves to deal with, who of course said we're not going to raise national insurance contributions. You should really have reversed it immediately. So there's that. And but national insurance contributions about 170 thereabouts if you look at what happened in the previous year. Interesting to see when this year finishes, it will have done. VAT about the same, 170 odd billion a year. But you can see that. But those are the main ways in which we raise taxes. So capital gains tax is a bit below. I think it's now probably moved up to somewhere between 60 and 80 billion, because of course it's been increasing a little bit. But otherwise, nothing very much. All the other revenue possibilities, of course, there's stamp duty, there's inheritance tax, which raised about 10 billion, stamp duty about 7 or perhaps slightly more a year. So you've got all those bits which add up, but really it is income tax and the other. So if you were to increase income tax rates by 2p in the pound, so 2%, say, then you get depending on how you calculate, depending on how many people are at work, okay, and paying income tax. But generally, I think the calculation is about 8 to 10 billion possibly per 1% increase, just for the basic rate of income tax, okay? So you do 2, you get nearly 20 billion. And if you also raise the higher rate by the same, by 2%, then you get another 4 billion. And if you raise it for the 45% one, you get, by 2%, you get maybe 500 million. So a lot less higher up. But then that gives you
all of
quite
these
a lot.
things. Sorry.
No, you got
All
your
of these
answer, more or
things-
less.
Yeah, more or less.
There
But
it is. Yeah.
All of these things are, and this is sometimes what I think people don't understand about economics, is we only ever see a snapshot. So whatever you do, as you were pointing out right at the very beginning, it's like whack-a-mole. Whatever you do, there is an impact from it. As Rachel Reeves found out that she thought she could tuck in the contribution from employers to national insurance, and there was a hue and cry about it because people said, look, jobs are a problem and this is putting people off hiring people. And we've seen this with younger people trying to get jobs as well. So one of the things that she did was to abolish the non-dom status, for example. I think there were about 80,000 non-doms, or there were. And people said, well, look, the problem is if you disincentivize people at the top end, although politically that's attractive, then that has some sort of effect in terms of investment in the country or whatever. No one can argue about that particular case. But what I'm saying is that whatever you do has an impact, right?
Well, that is true, but of course the non-doms abolition, if you want to call it that, I mean, the Labour government has given some small improvements, if you like, in their status for the short term. So there is a little bit of a leeway that they've given. But overall, it was all started by the Conservatives. I mean, it was Jeremy Hunt. and possibly sort of Rishi Sunak before. And I can't remember exactly when all that started, but certainly Jeremy Hunt during his era, the non-dom status was already being very severely reduced in terms of the advantages that they had. There was a concern then that they would go, and then of course the Labour Party took it a step further. I mean, that's basically what's happened. And the calculations are that which actually my firm has also been involved in doing, is that you reach a certain percentage of people leaving, and from that percentage onwards, if indeed it proves to be the case, then the impact of the change in the regulations is negative in terms of revenue collection. And that's the thing. So at that point is zero in terms of net improvement, and then but I think what you are suggesting is that loads of the bits and pieces that can be done, whether it is when someone leaves the country, which is the latest idea, and say moves to Dubai or somewhere, they then have to pay a capital gains tax on all the assets that they liquidate at some point. They may have to do it immediately. You calculate what they are and they have to pay tax, or at some point later. Now they do this for houses and anything to do with sort of property, land, and so on. But the idea is that it can be extended, should be extended to stocks and shares that you own as well. So there is that element. So you again perhaps can get a few billion. So what you and I are now discussing is the bits that could bring them a few billion. But if the behavior of people changes, then you might find that they don't really add anything much. And they also change the way in which people are looking at the UK. And as you suggested, people come in, spend, they employ people, start businesses, all that sort of stuff, which, may not happen so much in the future if you've changed the perception that people have of a country. And this is why it makes a lot of sense to go for something big. Yes, break the manifesto. Don't do anything else that is very silly or perhaps. And already we've seen the government backtracking on some of the things to do with pensions, for example, where there were all sorts of suggestions, and they may still be there in the end, some of them, on how to make it more difficult to get lump sums out and all that sort of stuff. That again is at the margin, really. But it is worth making one point, Tanya, if I may, which is that it is worth remembering where we started from. And you were right to look back. And it is true to say that there are extra issues now, whether it's Brexit, whether it's the impact of that on productivity, which the Office of Supervisory Responsibility has talked about for quite some time. They're recalculating the productivity anyway. It's true to talk about tariffs, how they make life much more difficult for exporters. And if you reduce your trade intensity generally, which we've done since Brexit, and possibly tariffs will do that, then you reduce as well. You reduce your growth potential. Productivity suffers. There's no doubt about that. That's what happens. The world growth scenario itself is negatively affected by all this, so we get affected. So there's all that. And of course, the continuing war in Ukraine, which is an issue too. But we mustn't forget that her first budget, Rachel Reeves' first budget in October, a year of 2024, actually had a very ambitious spending element in it. The reason why we're doing reasonably well by comparison to other countries, not so much that we have huge confidence, because actually the confidence has been declining. It's just beginning maybe to, we'll see, to stabilize a little bit, both business and consumer confidence. But it is because of the extra spending of the UK government itself. By comparison to the last budget of Jeremy Hunt, the Rachel Reeves budget had in it an extra spending, by comparison to what had been assumed then, of 70 billion a year throughout the Parliament. 70 billion. And the reason why we had this tax increase is to fund that 70 billion, because it couldn't all be funded by borrowing. So she funded it by something like 40 odd billion increase in taxes and 30 billion increase in borrowing. So one of the reasons why our yields are so high is because we had all this borrowing to do. And then at the same time, we had the Bank of England still selling all these bonds that they had on their books, which of course meant, another 100 billion going to the markets. I mean, the markets get indigestion after a while. So you could argue that
yes,
it is.
I probably should stop and explain that. Yes. So So I should probably just stop and explain that what you're saying is that if you are borrowing money, somebody's got to be lending you that money. And there comes a point at which they're saying, look, we don't, that's enough of that. Thank you very much. And so they ask for more money in
Yeah.
interest rates. And that's why that the size of that bill is becoming important. But what you're saying is, and this is always a calculation even individuals make, do we spend the money now and invest it in the house or whatever it is, and go a little bit overdrawn and invest that money and reap the benefits, or do we keep the finances tight and not do that? Everybody has to think in those terms, don't they? And I guess she was probably thinking at the beginning of Parliament was probably, if you were going to do that, that was the time to do it, I guess, politically.
Yes, I mean, the NHS absolutely needed help. But of course, it wasn't just the one-off extra spending, although there was, even in year one. In other words, even before, forgive me, the end of the financial year that she came in. So that would have been 24, 25. I will have to cough. Excuse me.
No, guys.
I could switch the mic off.
No, I think coughing is normal. Hopefully it's
Thank
not,
you. Thank you. No,
you
no,
know.
it's just because we've been talking about a subject which is so interesting.
I know it is interesting. And I think what we should, because we should probably not talk for too much longer because I've taken up enough of your time. But I think where we need to get to is, where does this leave her all? She's in a tight corner. And there's no question about it. And it's not as if we imagine that the economy is suddenly going to take off,
Mm.
everybody's going to go back to work and all of that. I mean, I suppose it could get better, but are you thinking that part of her hoping here and she's crossing her fingers and toes and everything, that simply more people will go back to work? You've said income tax is really important. If she could get more people back to work, if there are more jobs, because it hasn't been great for certain parts of the workforce, if they could get jobs now, that could change the picture fundamentally, right?
Of course. No, you're absolutely right. And I think one of the hopes that she has is that some of the investment which is going to be taking place, and there is quite a lot of investment that has been pledged to happen, and the government itself is going to be supporting. And the idea is that you borrow to invest, but you don't borrow for day-to-day spending. Well, that investment will lead to greater productivity and therefore greater growth. And that is already incorporated in the Office of Budget Responsibility's forecasts for growth, on which a lot of their view of whether one is meeting the fiscal rules or not is going to be based. So it's already, if you like, plugged into the system. And she just hopes that it turns out to be true. And the real worry is if the OBR decides that isn't going to be the case. And we've seen unemployment increase, if anything, recently. Quite bad figures for the summer months. And that's a worry, that if that continues, because as you rightly said, the increase in national insurance contributions for employers has affected companies' willingness to hire more people and expand. And they've also, of course, been putting prices up. One of the reasons why we have slightly higher inflation than is the case in other countries that we compete against is because of that. So, and if you...
Higher energy costs and higher food costs are the main ones, aren't they?
Yes, but also because they have higher employment costs. So the national insurance contributions increase has meant that particularly low-paid employees, but more generally employees that you hire now cost you an awful lot more, because the increase of the national insurance contributions rate overall and the reduction in the threshold to just 5,000 from the 9,100. It means it catches for lots of people who employ people part-time or employ people who are just entering the labour force, students and so on, at relatively low rates. Then they get caught almost immediately by the employer now having to pay national insurance contributions, whereas before they didn't have to at all. And that is a serious issue for many who are basically not hiring in order to make up for the increase in costs they would have had otherwise. And what we need to watch is that I do believe that there is a view in the government somewhere that if you want to improve your productivity and therefore growth, all you need to do is just get rid of low productivity jobs. Unfortunately, it doesn't quite work like that, because as you rightly said, Tanya, if you need more people to be employed, you need all those young people and to find their first steps. If they don't, then they perhaps never will be employed, and they certainly won't be employed to use their
because
skills
the
properly.
money isn't coming in to provide the boost in
Yes,
productivity. Yes, so we
yes.
must not see these things as isolated. I see. Well, look, it doesn't feel frightful. I feel that everybody's kind of bracing themselves rather than seeing this as a bit of optimism. The only person who might be happy is Nigel Farage. I'm not talking about his political position, but the fact that he smokes. When my father was a very committed smoker, and they would always talk about booze and fags in the budget. Nobody talks about that anymore because I guess smoking has evaporated to a large extent. And Nigel Farage makes this big deal about contributing to the budget because of his smoking. I don't know that he's contributing to the NHS budget in any particularly positive way, but certainly we can't go to booze and fags anymore, can we, Vicky? It's not as simple as that. Or petrol.
Well, I mean, we do see increases happening all the time there as well, except occasionally there may be 1p down on a pint of bitter or something like that. I think there was some announcement in the last budget that everyone sort of got very excited about. But generally, yes, they cost more and more. And of course, for all sorts of reasons, including health reasons, taxes increase for wine and so on in order to discourage people drinking it as much or whatever. So these things are still there, but perhaps people don't pay quite so much attention, mainly because they got used to it, not so much because they don't smoke necessarily. But you have raised a very important issue, which is that if that side doesn't perhaps, if people say drink less or smoke less, doesn't raise as much as had been expected originally, there is this whole issue of fuel. Because, of course, as you move away from petrol cars to electric cars, then you don't pay all the huge taxes that are attached to, a litre of petrol. And we hear the government is contemplating charging per mile for EVs now. And so it just, in order to make up for the losses that they're going to have. And, of course, they have not been increasing fuel duty, which they should have done, despite the fact that it is assumed in every forecast by the Office of Budget Responsibility that they will do so. That's been frozen since the early 2010s. That would have been raising billions and billions more if it had increased in line with inflation, as it should have done. So yes, the options are reducing, and hence why we go back again to what we discussed earlier, which is that I'm afraid raising income tax is the simplest thing, and it should not, even though the national insurance contributions tax is no longer a national insurance contributions tax, it's just used for general purposes rather than just social services or insurance against unemployment or the National Health Service. It's just used, it just goes into the pool of everything else that is collected. Yeah, and we should probably get rid of it.
Can I just?
But yeah.
Can I just ask you one, and just a quick answer to this? She refers consistently to a so-called black hole in the finances, and what Rachel Reeves is talking about is something that wasn't accounted for, was sort of missed out in the numbers somewhere, and therefore not allocated to a department. Am I right in saying that? And that part of the problem is the money being spent on migrants in hotels and so on because it wasn't allocated to the Home Office. Am I right or not?
Well, I think that requires a little bit more careful reading. I think the first black hole was
Right.
the national insurance contributions cut by Jeremy Hunt, which we could all see, but for some reason didn't seem to have been quite taken into account when they said they weren't going to be raising national insurance contribution income tax or VAT. So that's about 20 billion. It is true that the previous government was not processing asylum requests. Had stopped doing so for some reason for the last however many months. So that was an extra, as we understand it now, 6.5 billion possibly. The more of those you collect, more people coming in, nothing being processed, the more hotels you need. So that figure is increasing to about 15 billion is what we understand. It's a really quite large increase. That is what is the assumption. Some people, of course, have recalculated and said actually what wasn't allocated was about 2.5 billion. So you don't know exactly how big the figure was that wasn't allocated to particular departments, but we do know that the OBR and everyone else who had looked at it the IFS and so on, were saying, well, there is figures are being given to us in terms of what's going to be collected and what's going to be spent, but we don't have much detail of this. We don't know what the various departments are going to be allocated and have been allocated. And that has been very, very difficult for anyone from the outside to understand what was known, wasn't known, what was disclosed. Because as I know, having worked for the government, a new government possibly coming in before the election, they're entitled to go and look at the books. So Labour should have looked at the books, so the Treasury should have told them what was and wasn't allocated and what was fantasy and what was real. So they should have known. But the other gap that they have is that they had also said that there would be a headroom left for the future. Remember what I said? You don't borrow for day-to-day spending, and therefore you need to make sure that you've got enough should something happen. They had left about just under 10 billion. They restored that. They thought they restored that, the under 10 billion, with the first budget. It turns out they have not been able to do the cuts they wanted to do. So that has filtered away. It's been reduced to half instead of 10. So they've got the black hole there for now includes this 5 billion. It includes anything extra on asylum seekers, hotels, and so on. And it also includes possibly this downgrade of productivity, which the OBR will do. And every single 0.1% downgrade productivity growth loses you about 7 to 9 billion. So that's another 21 billion. You add it all up, plus the extra, possibly if they get rid of the two children benefit cap, another 3 billion or 2.5 billion or thereabouts. So it mounts up. That's why everyone is now talking about 30 billion being what she may need to raise this time round.
Yeah. Oh my goodness. Okay, well, thank you very much indeed for this very detailed analysis. And I hope that we'll be able to talk again after the budget. And you can give me your analysis of how she, yeah. Vicky, thank you so much for joining me on the Talk Diaries.
Thank you.